had some really good success on the exploration front. I guess the key spot for us, the niche spot for us, if you like, in the business is identifying the high quality exploration projects, making the discoveries, bringing them through resource status, and then of course taking them through those early sort of first mining studies. And because we do focus generally on high grade deposits, once you start throwing some economics around these things, that obviously attracts a lot of interest.
My next guest is Eric Roth. He's the CEO of Capella Minerals Ltd, trading on the TSX Venture under the symbol CMIL, and in the United States under the symbol CMILF. Eric, welcome.
Thanks, James, and thanks for the introduction, and also a big welcome to all your listeners as well, too.
I feel like I've been following in your shadow over the last decade, if not quite a bit more, because let's just cut to the chase. You've got a history of wins in the mining space. So let's start with an overview of your career to date and some of the wins you've been involved with.
I'll just go quickly back through the whole history, but I guess I am originally a geologist out of Australia. But I guess most of the years since then, I've been working in Latin America and elsewhere with companies such as AngloGold and others. The two companies that are the most recent wins that you mentioned, and that's where we first met, was the Extori gold mines. That was a very high-grade gold-silver project that we had in Santa Cruz province in Argentina. And we had a sister company called Exeter Resources, which had the Caspici. It was a very big porphyry project in Chile. And as you know, in the interim, both of those companies have been subsequently bought out. So they're now in new homes. Then on the back of Extori, I basically got involved with a company called, Mariana Resources. We essentially had the Hot Maden project in Turkey, which was a very high-grade gold and copper asset, and one of the highest-grade assets of recent time. And it was also acquired in 2017 by, in this case, by Sandstorm Gold. So as you say, we've had some really good success on the exploration front. I guess the key spot for us, the niche spot for us, if you like, in the business is identifying the high quality exploration projects, making the discoveries, bringing them through resource status, and then of course taking them through those early sort of first mining studies. And because we do focus generally on high grade deposits, once you start throwing some economics around these things, that obviously attracts a lot of interest. So as you say, we do have a few wins under the belt, and it's always nice to say that, we've had quite a few discoveries along the way. So I guess we can say that we, have a good sense for what needs to be done and, of course, how to do it. So I guess that's a pretty important box to tick for investors as well.
Right. Okay. So let's talk about Capella Minerals. What's going on there?
Basically, we have a good mixture of gold and copper assets. The focus at the moment for us in terms of the projects that we manage 100% are in Scandinavia. We do also have two high-grade gold joint ventures in Canada. Now, both of those joint ventures in Canada are in the hands of the joint venture partners. One is called Domain, which is in Yamana's hands as the majority partner. And the second one, of course, is Savant Lake, which is in Ontario. And that's a JV with Prospector Metals, which used to be known, your listeners might remember them as Ethos Gold. They just did a name change very recently. But the projects that we focus 100% on are the Scandinavian assets, and the focus really is we have three high-grade copper assets in Norway. These are what we call massive sulfide deposits, and again, it really follows that our business model of looking for high-grade assets. And in this case, in the case of the Norwegian assets, these were actually former mining districts. So the nice thing is that we know there were mines in the area. And in fact, those mines were in production literally for hundreds of years. They closed in the mid-1980s for two reasons, not because they run out of potential, simply because in the 80s, of course, copper prices dropped to about 60, 70 cents a pound. And of course, now we're sort of a north of $4 a pound environment, so completely different environment today. But of course, the other thing in Norway too was the discovery of oil. And I guess, oil spun off so much revenue that basically people just walked away from the mining industry, and it just went into hibernation for 40 years. So I guess on the Norwegian side, so we're very happy to have district scale projects around three former mining districts, one of which is called Hessjøgruva, the other one Kjøli, and the other one Løkken. And just an aside too, so Løkken was actually the biggest massive sulfide deposit of its class, and I think people forget, how much copper did actually come out of Norway. I mean, it's it's just one of those forgotten things in modern history. So, and as I say, Løkken was a big deposit. It was about 24 million tons, 2.3% copper, 1.9% zinc, just to give you an idea of the grades. And the work that we've done in all these districts suggests very good cobalt concentrations as well. So I guess going forward, we'll be focused not just on the copper, the zinc, but we'll also be looking at cobalt and gold and silver and some of these other elements that really were never taken into account in the economics of these things. We also have a gold project in Sweden, and we have a gold and copper project in Finland. And I guess the Swedish one is still fairly early stage, so we're still in the process of doing that systematic sweep. We have gold-bearing boulders on surface. Essentially what we're doing is we're looking for the source of those boulders. And the project in Finland, we're very fortunate to have been able to pick up this ground. We picked it up in August. This was basically August last year. From a company called Cullen Resources. We've earned into 70% of that ground, and it's in a part of the central Lapland greenstone belt where, especially the Canadian viewers will be quite familiar with that part of the world. There's a lot of good discoveries that have come out of there. You've got Rupert Resources, of course, at Ikkari. You've got Orion Resources down the road. You've got the mid-tiers are quite active there. So you have Kinross, you have B2 Gold, you have Agnico Eagle. So we're very fortunate to have been able to acquire, a very nice 200 square kilometre land package in what is very prospective ground. So just in summary, I guess, so we're split between Canada and Scandinavia. Our primary focus is Scandinavia, and we have, I think, a really good mix of gold and copper, and of course thinking about those other metals that come along with the copper as well, such as the zinc, the cobalt, gold, and silver as well.
In the current deflationary environment catalyzed by Fed sort of retracement from rampant spending and zero interest rate policy, is the expectation that there will be more of a focus from the investor community on junior mining as opposed to the tech sector that has been dominating the interest of investors globally for a decade now?
I guess we, as on the exploration side, we're always the eternal optimists, but I do think it would be nice to see some of that money coming back into, what I consider a really undervalued and incredibly important part of our economies. I mean, it's, I look at the valuations of the tech stocks, or if I look at crypto or any of these things, personally, I just think they've just gone completely out of whack. And it's kind of nice to a certain extent to see a bit of a correction, if you like. But at the end of the day, I mean, I think, it'd be nice to see some of that money come back into the junior mining space. And at the end of the day, look, we are looking for commodities that the world actually needs. And we know that, particularly from a green energy perspective and, the energy transmission and energy storage, we need the copper for energy transmission. We need the copper cobalt for all the electric cars that people want to have. So we do actually, I think we are, I don't want to use the word unloved, but we are a sector that really could see some, it would be nice to see some of that cash coming in from these overvalued sectors back into our sector, as a general comment, I think.
In Scandinavia, I'm curious as to, we're always used to hearing about the difficulties of negotiating with governments in undeveloped countries. What's it like to negotiate investment contracts with developed countries?
Well, that makes a big change because, as most geologists, usually end up in quite a few jurisdictions around the world. And to be honest, I've been actually quite impressed. I think the projects that we've pushed the furthest so far have been the Norwegian and the Finnish assets. And to be honest, we've had a lot of good support from both governments. And here, when I talk about governments, I talk about everything from federal to regional to local. If I look at Norway specifically, for example, we've had a lot of support from the local community. And in fact, that local support really helped us get into this latest project called Hessjøgruva. People were so happy with the work we were doing at the nearby Kjøli project. They said, you guys have got to come and have a look at this. Hessjøgruva was an advanced stage project that had been sitting there since basically the early 1980s. And it's a real joy. I think we've had a lot of good support. And the other thing, too, to keep in mind, too, is that a lot of the areas we operate in, because they were former mining districts, most people, they can see the old mines. They all had A lot of people had grandfathers and family that worked in the mine, so it is actually part of the DNA. I think people forget how important mining was in Scandinavia for literally hundreds of years. And I think it's just, one of those things that people forgot. Just one of these sort of, asides. I mean, people don't realize that the copper on the Statue of Liberty in New York, for example, came from a Norwegian copper mine. I mean, just to, they're just sort of anecdotes that you think, well, okay, but I mean, it's quite incredible to think that, these countries had mining for hundreds of years and there's still plenty of potential there. And we've had a lot of support for the projects that we've been working on.
Particularly in the case of the copper price performance, I mean, seeing it go above $5 was heartwarming, to say the least, as a long-term copper investor. But now, of course, it's in retreat, and that's part and parcel of the deflationary, package that you get when the central banks collectively collaborate on reducing balance sheets while raising interest rates. But there's been a real deterioration in the quality of copper mines at the head grade level. And there's been a dearth of new mines brought on. So I'm curious as to at what point does the supply side increasing while the demand side deteriorates, at what point does that catalyze new mine development?
I'll start on grade to begin with, because obviously, if you look at most of the new mines that have come into production, let's say the last 50 years or so, there's been a very strong bias to the big low-grade porphyry copper deposits, right? Which, but as you mentioned, even those, the grades have been dwindling as we go. I mean, some of the new mines are less than 0.5% copper, which is quite incredible when you think about it. I mean, it's they're huge volumes you've got to mine at only 0.5% copper or even less. So they're huge capex. I mean, to build a mine like that, they're phenomenal. I mean, they're just huge operations. There's a big capex that goes into it, a lot of investment needed. And at the end of the day, you're still not home and hosed, in the sense of a lot of the porphyries have arsenic problems too, because they have other arsenic and other problem minerals associated with the copper, which you then need to deal with. And that specifically is why we focused on these relatively small, high-grade massive sulfide deposits, James. And really the twofold side from our side is, one, they're high grade. So, and when we talk about high grade, we mean 2% copper or better. So we're not talking about, a lot of people will say, high grade is a different number. But from our side, 2% is what we're looking for as a minimum. The other thing, too, with these massive sulfide deposits is they're very clean deposits metallurgically. They're very simple to get the copper out. They generally never have any of these nasty elements in them like arsenic and things like that, which, of course, you want to avoid if your final product is a concentrate, because, of course, all the stuff you don't want also gets concentrated into that. And then the other thing, too, because they're relatively compact operations, they're high grade, they're very rich, they're very compact operations, so they're relatively small. They've got a small development footprint, and a lot of them are underground operations. So there's almost no, there's very little on surface. So that's what we focus on, really, these high grade deposits with, good metallurgy and relatively small development footprints. And of course, a small development footprint also means relatively easy permitting. So that's really what the focus is. So we, from our side, we focus on grade, but also making sure that, the metallurgy looks okay and all of these things even before we start, because that's obviously very important. You've got to know what the final product looks like before you even start.
All right, Eric, we'll leave it there for now. That's a great introduction to the company. We'll come back and have you on again soon. And thanks for joining me today.
Thanks, James. Appreciate it. And look forward to seeing you again soon.
You bet. PDAC.
PDAC.
I'll see you there.